But the immediate term risk range for the S&P 500 is currently 2057 on the downside, which is where they started the year, and 2012 on the upside. So you have basically 1.6% downside versus 1% upside. So when there's more downside than upside, what we typically say is sell. When there's more upside than downside, what we typically say is buy. There was more upside than downside in the US dollar on Thursday, so we signaled buy on that. We're not, again, we're bullish on the NASDAQ, we're bullish on big cap, good balance sheet tech stocks. We're bullish on a lot of different things. We're just not bullish on the S&P 500 when it's closer to the top end of the risk range. If you're looking at the volatility, which is important, because again, when we model these ranges, we use three big factors just to use the baseline of the model. We use price, volume, and volatility. So the volatility signal didn't break. It's been very difficult to see a breakdown, even on front-month VIX, which I'm talking about front-month VIX being equity volatility below 14. So that's still the low end of the range, and the top end of the immediate-term range is actually more like 18 to 19. Call it 18.67 if you want to be specific, because we like to be, because the math is. So again, if you look at that for what it is, I think you'll see quite cleanly that we're setting up for another big volatility move that's most likely going to be led by credit and currencies and commodities. No, you can't wake up this morning, Mr. Broker Boy, and tell your friends that it's X Energy.
Mr.
X
Broker
Energy. Isn't that that's got to be one of my favorite.
Well, if you back out energy.
If you back out energy.
Well, if you backed out housing in 06 and 07, you know, everything was great.
This high net worth broker guy at, I can't even say it, Fox is getting mad at me, but I'm like, I can always predict what they're going to say. Pretty soon they're going to have to say X energy, X consumer, and X credit. The market looks fantastic. Isn't that fantastic?